I'm recording the second portion of FR September-December 2025 recent past paper. This is very important past paper because in this specific past paper, there were two questions. One is about the consolidation, the consolidated profit and loss and goodwill. Second is about the ratio analysis, right? Now, in this ratio analysis, what are the requirements? Now, see, calculate using the pre-formatted response already provided, ignoring Coral foreign exchange difference. We have to ignore the difference and just need to calculate these ratios for both companies for a 4 marks. Already the table is given. See, these four are the cash marks. We are not supposed to make any adjustment. Just ignore those adjustment. Just focus on the specific area which is called just calculations of ratio. The table is here. I will be quickly doing these 4 marks. Then we'll be discussing about any other areas, but I will be working on quickly on these specific, let's say 4 marks. Okay, so data is here. I'm not going to read the case and all that. This is the data, right? Okay. Now, before any making adjustments, gross profit. It's in Coralco. So 4650 divided by 14995 into 100%. Right? Operating profit margin, this 1050, right? Divided by revenue. If you are very good at Control C, Control V. Now, return on capital employed, the operating profit, right? The operating profit 1050 divided by the capital employed, which is debt plus equity, the 4000 plus 5000. 4000 plus 5000 divided by, into 100%. Gearing, debt divided by equity. What is the debt? 5000 divided by 4000. They have already given the formula 5000 divided by 4000 into 100%. I will be doing all the results calculations after putting a data. Let's say discuss about this 4505. Now Reef Company divided by their revenue, which is 15015 into 100. Right? Now their operating profit is 1800. I'll be doing this divided by this 1800 divided by capital employed. They have a capital employed of 6000 plus 2000, right? Divided by, into 100. Then debt divided by equity, 2000 divided by, let's say 6000 into 100. So I have already calculated the all ratios. So I will be putting the data. I have calculated all the ratios. I will be putting data. So it's 31%. Right? It's 31%. It is 7%. And it is basically 11.7%. Make sure that you are following a proper sequence. If you are putting data in a 1 decimal, so follow that format. 11.7, it is a 125%. Right? But when it comes to Reefco, they have a 30%. Then they have a 12%. Then they have a, let's say, 22.5%. And then they have a 33.3%. So this is the initial results. I'm not concerned about whether which company is good or which company is bad. We are coming to that point, but before we have done the calculations. These are called 4 marks straightforward. Now, calculate the foreign exchange difference. Okay, number one, we have to calculate the foreign exchange difference. We have to calculate the foreign exchange difference. And then we will be recalculating Coral Company, only Coral Company ratios. not the whole, on not the four all ratios. We are just going to recalculate these three ratios, and they have, I guess, already given the pre-tablet as well, pre-working tablet as well. I mean, they have given the table as well. So see, the 7 marks are for the calculation. Now we have to read, now we have to understand what is the data, what is the concept, what is the cases. So let's move to the case. Now, Aquaco is a listed company, okay, looking to grow through acquisition. Okay, basically, it's an company. What they are trying to do, they are trying to, they are going for a growth, and they want a growth through acquisition. I mean, there are chances they might be acquiring one of the two companies, the Coralco and Reefco. So we as a financial analyst might be giving them an advice which company is best, which company they should invest according to the ratio analysis, according to the financial analysis, right? And there are any other factor you can write as well. Currently, they have a 5.1 million excess cash available for investment in one company only. I mean, they do not want to invest in both. They want to invest this 5.1 million surplus in only one company, and they are having a two options. The Coralco and Reefco are the targets. We have to compare both companies, and eventually we have to give the advice to this specific Aquaco according to our results, according to our analysis, which company is the favorable, the best for them, right? Okay, and Aquaco intend to take an active role in managing its investment. What this line means? What this line means? Mean you are having a 5.1 million in your pocket and you want to invest. You are having two options, and your intent is to take an active role in the managing its investment. Mean whichever the investment you are going to take, whichever the investment you are going to make, let's say, whether it's a Coralco or Reefco, you want an active role in the management. It means actually your purpose is to get the control. Because if you are having a simple investment, you might not be having an active role in the managing investments. I mean, you might not be having sufficient voting rights. Same goes with a significant influence. Even if you are having a significant influence, you might not participate in the actively in the management. If you want uh, active role in the investment, you should be having a sufficient control, sufficient voting rights, which is normally called the control more than 50%, which is 51%. So it means your intent is to make investment in which you will getting the control. We'll be looking at this point as well. Both operate in a same industry. Okay, they both operate in a same industry sector. Let's say both are operating in the educational sector, maybe food sector, same sector. So it's easy. It's a like versus like, right? Although there are chances company size might vary, but industry is same. At least their products most probably are going to be same. They have the extracts. This is their year end. We have already calculated. This is their financial position. And additional information. Remember, their year end is 31st August X6. It means their year has started at 1st September X5. 1st September X5. Both companies have a same year end. Both companies have a same year end, so it's very important that they have no comparability issues. Okay, now on 1st December X5, year started at 1st September X5. On 1st December X5, Coral company purchased an atom of property, plant and equipment from overseas supplier. They have acquired an asset from overseas supplier. Please listen very carefully. They have acquired an asset from overseas supplier. That's why foreign exchange difference calculations are there, which cost 6 million dinars, although the functional currency is a dollar. Functional currency is a dollar. They have might written somewhere in the notes as well, but I guess here is it's there. Paid the invoice. You have paid the invoice. You have paid the invoice at 30th April X5, X6. Okay, let me just plug the charger. Okay, so see, they have paid the invoice It means transaction is settled during the year. During the year, they have entered one-off transaction. They have bought in property, plant, and equipment from overseas supplier for a 6 million dinar, and their functional currency is a dollar. The foreign exchange difference was not yet calculated and not even recorded. So we have to record it. First of all, we need to calculate the foreign exchange gain. Okay, the transaction at should be recorded at the spot rate. First of all, we need to make sure that this transaction should be recorded at 1st December at what value that should be recorded. Okay, 1st December X5, it is going to be recorded at 6 million, assuming $30 is common. Okay, assuming $30 is common. So it's a 6 million divided by what was the rate? What was the rate? Right? It is an indirect quote and we are supposed to divide. So it's 2. So it means we have recorded this dollar 6 million divided by 2, it will be $3,000. This was on the purchase date when we have purchased. Right? The settlement date when we have paid the cash, which was, I guess, 30th April, X6. On that date, the rate was 3. The rate was 3. So 6,000 divided by 3, it will be 2,000. So you have paid. See, at this date, what the entry we have made? Debit, property, plant, and equipment, credit payable. It means payable is recorded at the 3,000. But now we have paid the payable and we incurred only $2,000. We need only $2,000. So it is a settlement on the liability. It is the gain on the settlement. You were supposed to pay the 3 million to the payable, but eventually the rate has appreciated, dollars appreciated. So yet now you need a less dollars to pay that supplier. You need only 2,000. So it means it is a gain on the settlement. It is not loss. It is a gain on the foreign exchange. So it is a gain, right? It is the gain. Now this Coral company, number one, we need to calculate the gain. We have calculated the gain of 1,000. But they have not recorded this 1,000 gain. They have not even recorded this gain. And this gain is normally part of operating areas. Operating areas, it will increase the profit. It will increase the profit, and those profit increase will all automatically increase the retained earning as well. Remember, this is very important. If you are only just increasing the profits, eventually you might correctly calculate the operating profit margin, but from the capital employed perspective, if profits are going to be increased because it is a gain, let's recalculate, because what was the requirement? Calculate the foreign exchange gain, and now you have to recalculate these three ratios. What was the operating profit? 1050, but we have a now 1 million exchange gain. Add this in, use bracket, 1050 plus 1000 gain divided by revenue. What was the revenue? 14,995. 14,995 into 100. Right? On the return on capital employed, now use this updated operating profits. These profits divided by what was the capital employed? Capital employed was 4,000 plus 5,000, but now we'll be adding the additional capital employed as well, which is this specific the calculations you have done. You need to add this as well. This specifically 4 plus 5 plus the 1 million exchange gain, because it is going to increase your retained earning as well. 4 million plus this 5 million plus this 1,000 exchange gain. Sir, why you have added this in capital employed? Because this 1,000 profit is not only affecting operating profit. It is not only affecting operating profit. It will be part of profit for the year. Eventually, it will increase the profit for the year. And when your profits are going to increase, definitely your retained earnings are going to increase. And where your retained earnings are going to increase, your overall capital employed is going to increase. Okay, now let's talk about debt over equity. 5,000 debt, but now equity will be this 4,000 plus again 1,000 increase in retained earning. So it is basically 5,000 divided by 5,000 into 100. And this is again going to be into 100. This is very critical. There are a lot of students who do often make the single entry adjustment, mean they just enter the profits, but they do not update the retained earnings. This is common issue. Always FR examiner highlight this type of error, that the student does understand that profits are going to increase, but they do not link that profits with the retained earning. Same, if there is a loss, then retained earning is going to decrease. Profits are going to decrease. It was not the gain, if it was let's say situation reverse. If there is a loss, we have to do the reverse calculations. Okay. Now I have already calculated the calculations. It is 13.7%, and it is basically 20.5%, and this one is actually 100%. Right? We got the 7 marks, and those were not difficult. It's just that do not get panic. It is something which is easy, which is not difficult. It's just that in paper there are a lot of students who do get tense, that it is not an ordinary question, it is not a straightforward question, it is something which is different. You have to make certain adjustment, and then you have to recalculate. Right? Okay. Now the main part comes. See, if your calculations are correct, then this paper, this specific question is not difficult for you to pass, because you have already scored the 7 marks correctly. Now you have to, in order to pass this specific question, you only need a 3 marks. By the way, analyze the performance and position of potential targets. We have to analyze both. Explaining whether Aquaco would exert control over its investment or not. We have to also think about this. We have to also think about this as well. There are chances there's a certain form of data is given. We have to find out whether Aquaco would exert control over its investment or not. We will be doing certain form of calculations and concluding with a clear recommendations on which company to investment. It's not something that you just write that Aqua company should invest in Coralco or Aqua company should invest in Reefco. You have to explain. It's not just something that you have to just recommend. Recommendation with the clear explanation as well. Why you are saying that Coral company is the best? Why you are saying the Reef company is the best? Okay. Now, how you are going to write your analysis part? This is the important, this is very crucial. There are a lot of students who do often they do not write the analysis part. They just leave the paper blank. So I will be guiding you how you will be writing. See, you can comment on the revenue, but right now it's difficult to comment on the revenue because there is not data. They operate in the same industry, although they do not have a significant difference in the revenue. If there is not significant difference, you can't compare, you can't write anything about these, right? But you do have a right to comment on the gross profit. In these questions, normally I tell my students, start from the top. See, their gross profit was 30%. Reef company is having a gross profit of 30%. They have a gross profit of 31%. You can start from this. Let's say the gross profit of Coralco, use the company name, is just slightly. Although you can be specific as well, 1% better than Reefco, right? The gross profit of Coralco is just slightly better than Reefco. Now, we do not know the exact idea. We do not know the exact idea. Let me read the notes if there is anything given regarding the revenue. Although this overseas gain does not have impact, because we are right now we are only calculating the gross profit, because that gain has impacted other ratios. We are just talking about gross profit. It's a loan, 10-year bank loan, share price. Neither they have issued shares or something. Okay. So we are not sure about the revenue. So we can write maybe or might be. There are two options might be. One, there are chances that coral companies might be charging a higher selling price. Other, they might be having a better control over their cost of sales. There are two possible reasons. Though this is might be the possible reasons might be that Coralco Coralco charging slight charging higher price to customer than Reefco, or Coralco might having a better control over their production cost, right? See, this will earn you a proper 1 mark. This is called analysis that you are writing if you are not aware of the actual reason. Try to find out the actual reason if they are given in the case. If not given, you can take assumptions. And see, I'm not writing the rote learned answer. I'm making that specific to the case. This is the way you need to answer. Okay, now talk about the operating profit margin. It is very surprising. It is very surprising to see that their gross profit was better, but their operating profit. Reef company is having a better operating profit. It's 12% and they are having an operating profit of 7%. And what about this is the before adjusting the calculations of exchange gain, right? But situation has been changed. See, when we have included the gain, automatically profit has been increased. Now their return on their operating profit margin has become a better. It has become a, let's say, 13.7. So what you have to do, you have to write first, compare this, then make sure that you comment on this adjustment as well. This is the right way you can do your analysis. You can write down your analysis. See, what was their initial, let's say, calculations. What was their initial calculations? It is the operating profit margin. The operating profit margin of Coralco is way below than Reefco, which is very surprising. Which is very surprising, considering the fact that they have better gross profit margin. I mean, it is very obvious. If you are a company and your gross profit is better than other company, so it is a normal assumption that your operating profit margin is also going to be better. But see, it is surprising. It is the situation has been changed. It is not something which we have assumed. Their operating profit is way below than this. I mean, it is 5% below than. So now this suggests that Coral company is might not Coral company is not enough efficient when it comes to their operating costs. There are chances that they do not have a better control. You can write any paragraph. The operating margin is way below, then it's very surprising. This suggests that they are not having a better control over their operating costs, or they are not enough efficient when it comes to their operating costs. Right? Further, further, when Coralco recorded the impact of foreign currency transaction, recorded the gain on recorded the gain on foreign currency transaction of $1 million, which lead to increase in operating profits as well the operating profit margin, right? So again, it is one-off event, right? It is one-off event. On this basis, comparability is difficult, although you can write this paragraph as well, although you can change this as well. Let's say if they are having a certain form of difference. Now, if you can see that maybe there are chances further when Coralco recorded a gain on foreign currency which lead to increase in operating profit as well operating profit margin. So this might suggest that Coralco operating margin, increase operating margin as well, operating margin. Now this is above than Reefco. See, now it's 13.7 and there is 12%. But as this is one-off event, so can't conclude, can't confirm that Coral company is having, Coral company is having good results, right? Because it is one-off event. It's not something which is, let's say, going to occur again as well. There are chances that, and also it lead to comparability problems as well. Now, if we talk about further, the ROC, it's very common because considering the fact their operating profit margin is lower, their ROC has been also lower than the reef company, right? And by the way, even before comparing with the other company, I mean before comparing after the results, see it's 22.5%. It was already 11.7, and even after making adjustment, it is still lower than the reef company. So their operating profit margin is also lower, right? So you can write the now I'm doing a vice versa statement. Just look at here. The ROC of Coral company was almost equal to Reefco after adjusting the foreign currency gain. After adjusting the foreign currency gain, they have a ROC of 20.5. The Coral company, and they are having a 22.5. So it is almost equal to, right? But if Coralco exclude that gain, their ROC is way below than the Reefco. See now, it's 11.7, which suggests that Coralco is might not utilizing capital in efficient way, right? They are not earning sufficient revenue because ROC is a combination of operating profit and the asset turnover. So it means they are not good when it comes to conversion of capital into revenue, right? So this is something, see, I'm trying to write the points. You can use the percentage as well. Although percentages are there, you can write the percentage as well. It's up to you. It is all about the performance. It is all about the performance. Now let's talk about the position. Now let's talk about their position. Now, if you can see, they have a significant amount of, if we can talk about the position before moving forward to the gearing ratio. Coral company is having a 8% loan note several years ago, and they are going to repayable right now. What is the year? It's X6. After 2 years, this loan notes of 5 million should be repaid, right? And they have a 8 million, 8 million. Okay, quickly calculate the 5,000 multiplied by 8. 5,000 multiplied by 8 is going to be 400 finance cost. But if you look at their interest on borrowing, it is 600. This is something, these are called in-depth analysis. This is what financial analysts normally do. If you look at the figures, see, the loan is 5,000, interest rate is 8%, so 5,000 into 8%, it should be 400, but their interest is 600. So let's find out what this other 200 interest relates to. And also this loan is repayable in after 2 years. If we are going to acquire this company after 2 years, we have to repay this as well. Mean as a company, Coralco, they have to repay as well this amount. Reefco negotiated a 2 million 10-year bank loan. Okay, so it means this is they have recently, it's an X6. They have took this Reef company has took a 2 million loan in the X4 and for the 10 years. So it means we have to repay after the 8 years because X4, X5, we are right now in the X6. It is just 2 years has been went. We have to repay after the 8 more years. And the purchase of new equipment, the principal is repayable in full at the redemption date. So it means right now we are not supposed to pay this amount. This is very important factor when you are buying a company. You have to look out what are their contractual payments, when they're due, when the contractual payments are supposed to be due. Okay. And by the way, I have no idea regarding their interest, regarding their remaining interest. So you can write two separate points. One regarding the length of loan, one regarding the length of loan. Second is about the interest cost. Second is about the interest cost. You can write the two separate loans, right? You can write the separate headings as well. It's up to you. Now we are talking about the position. Number one, we can write on the ratio as well, and then we can talk about, let's say, the specific thing which is about, let's say, we have discussed the interest expense and the time. See the gearing ratio. They are having a gearing of 33.3, and this company is having a gearing of 125 before adjustment. But after adjustment, their retained earning has increased, so now it's 100%. Okay. The gearing of Coralco is 100% after adjustment of gain, which is which is higher than a reef company which is having only gearing of 33.3%, right? So the reason is obvious. That Coral company is highly dependent. Coral company is took a significant loan, right? Other factor, Also, Coral company will need to repay the loan in upcoming 2 years term, in 2 years time. So they need to arrange sufficient cash in future, sufficient cash. On the other end, that REFCO will be repaying that loan in after 8 years. So they have less pressure right now, right? Further, if we if looking at further looking the interest expense of Coralco, which is 600, although their finance cost on loan is 400. You can do the calculation and this will give you additional marks. How we have calculated this? 5,000 loan into 8%. So it is difficult to determine that these additional 200 interest relates to which areas, right? So it's difficult to determine these additional 200. Analysis can be done in a better way if further information is provided regarding these areas. There are chances these 200 interests might be some of their uh, provision related things. There are chances some of the, let's say, non-cash interest, the unwinding, maybe provision, some type of things. There are these type of interests. There are chances that the company might recorded that. But we can do the better analysis if the further information is available. Right now, it's not information is not there, so we can't analyze exact what is going on. Right? Uh, it is unclear, right, whether they will be having enough cash resources or not. Although neither company have issued ordinary shares or raised any additional capital in this year, but definitely, as a company, we need to consider whether they will be having enough cash resources in order to, let's say, they will be paying or not, right? Okay, so there are chances. One of the point we can raise in order to repay, let's say, if we are going to acquire this company, and in future, if they need a loan repayment, Coral company might issue additional share as well. I'll be covering this point later. Now let's talk about this. We have to answer this as well, right? They have given the share price data as well. Now I will be doing a certain form of calculations. These calculations are very, very important in order to find out the potential percentage of investment. How we will be doing this? See, Aqua company is having a surplus cash of what? Aqua company is having a surplus cash of 5.1 million excess cash, right? 5.1 million excess cash. If I can make a quick table here for your understanding, let's say two companies, their shares, their share price, and let's say their percentage, right? This is Coralco, this is Reefco, number of shares they are having both. I will get the data regarding number of shares, 2000 or 1000, and the share is having a par value of 1. Okay, it means their number of shares are same. 2000, and right now they are having 1000. And what is their share price? Share price is there. This company is having a share price of 6, and this company is having a 6.25. And what is the cash available? Aqua company having a cash available, which is, I guess, I'll be writing $30 common, 5100, right? So in 5100, how much shares will be getting of both company? I'll be adding two more columns. Right, I will be adding two more columns. Just give me a second. Okay, see, I will be adding two more columns. Okay, now see, even if it's up to you, it's not mandatory to make a column and all that. You can do it by, let's say, just write down the numbers. Now, how much shares we will be getting? See how much shares we will be getting. This is something which is very important, right? Acquire. We are having 5100 and they are having a selling price of 6. So 5100 divided by 6. We will be getting a number of shares. 5100 divided by 6. You need to understand how much of shares you will be getting. Do the calculations first. Let's say 5100 divided by 6. 850 shares, right? And they are having a total of 2000. So percentage of ownership, 850 divided by 2000 into 100. 800, sorry, it was 850 divided by 2000 into 100. It's 42.5. It is 42.5. You will be getting numbers for this, marks for as well, this for this calculations. And in this case, uh, again we are having a 5100 cash, but now the share price is 6.5, 6.25, sorry. So 5100, we are having right now 5100 in pocket. If you are going to buy the shares, price is 6.5. So how much will be getting the number of shares? 5100 divided by 6.25, 816, 816 number of shares. And this company is having a total shares of 1000. So 816 divided by 1000 into 100 equal to, this will be 81.6 most probably. So see, their intent was to take an active role. So if they are going to acquire the Coralco, they will be having only 42.5, which will generate them a significant influence that they might not having a uh, active role in the control and all that managing this specific Coral company. But in the case of Reef company, they will be having a controlling. Just explain this line here. As see the above table, investment of Aquaco. See, I'm using company's name. Aquaco in Coralco will only lead to acquisition of 42.5%, which will give significant influence, although significant influence, so they can participate in management of Coralco, but they will not be having control or active role in managing that investment, right? But in case of Reefco, Aquaco will be having acquisition of their 81.6% shares, right? Which will lead Aquaco, which will give control to Aquaco so they can actively manage this investment as per their intentions. Although this is enough, right? Now listen very carefully. This company has to pay the loan after 2 years. The Coral company. What if they do not have enough cash? Right now you are going to invest in this company. They might use this cash, and in future 2008 when the loan repayment date dues, they might not having enough cash. There are chances they might be issuing additional shares. So if they are going to if they are going to issue additional shares in X8, it might dilute your existing control. There are chances right now you will be acquiring 42.5. If in future, right now, after 2 years, they will be needing more cash. And in order to raise that cash, they might issue new shares. And if they are going to issue those shares, that will impact your significance. That will dilute your control, right? So I guess these are the enough points. These are the enough points. Now you can just make a conclusion. You can recommend them which option is more better than the, let's say, one about. It's up to you, right? It's up to you. It depend on you. It depend on you. You have to write your own conclusion. From my perspective, Aquaco should invest, right? Uh, Reef company appear more suitable investment for Aquaco rather than Reef company appear more suitable investment for Aquaco rather than Coralco. Why? Because their operating profit, because their profitability as well their position are way better than Coralco, and also Aquaco will only acquire control in Reefco using that surplus cash. That's enough. See, this is a student level, let's say, I would say that that is called a student level answer. This is something which is not, let's say, extraordinary, you can say, but it is up to the mark. It is to the point. You have covered the all aspects, you have covered the all area. This is how you are supposed to answer in the real exam as well. This is not difficult at all. You have to work out, you have to figure out, you can and take any other points as well. It's up to you. You can write down on their retained earning as well, on their, let's say, some other figures are there. So, and even you can write this point in as well regarding this finance cost. There are chances this, as you can take assumption, this interest might relate to the provisions, might relate to any overdraft or something. You can write anything. But I hope you got the answer, you got the pattern, how you are supposed to write your answer, how you are supposed to draft your answer. Just back yourself. The ratio analysis are the cash marks. You should be aiming at least out of 20, 15 to 16 marks. 15 to 16, even if you are thinking about 20 out of 20, it's not something which is impossible. It's very easy and you should be working on it. So I'm wishing you all the best. This is all from my side.